Hello, everyone, and welcome back to another exclusive Boom Room interview. This is Sasha with Arcanum. I'm here with my good friend and colleague Carmelo, and today we have the pleasure of speaking with Mohamed Ezeldin, the head of Tokenomics at Animoca Brands, and more recently, president of Open Campus. Mo, it's been a while. It's great to speak with you as always. Good to have you on. How are you doing, brother?
GM, I'm doing well. It has been a while, but really excited for us to be together and just like spitballing, dropping some bombs as well. Not literal bombs, probably the wrong context to use given where the world is at right now. Probably have to cut that bit out straight off the bat.
No, it's in. It's
Go
it's locked in.
It's locked in. Fuck it, let's go. No, but again, great to be here. Super excited. I think what we've seen a big evolution in the space since we spoke last time. So I think it'd be great to catch up on what we're seeing and just try and educate as many people as possible as well.
Yeah. Absolutely, man. I think the last time we've spoken was, I don't know, a year and a half ago or something, like
I
in
think it
person.
was about a year and a half. Yeah, it was at the
Yeah,
Agora
yeah.
event in Dubai, sunny Dubai. Very cold in London now. The weather's changed, so looking forward to being back in the sunshine sometime soon.
Yeah, yeah, 100%. And I mean, we can link that video. We posted that video on our channel. We can link that interview there. But just for context for our viewers, that was when Mo and I met for the first time and just started talking tokenomics and literally saw like two chairs, a camera, and a microphone and said, let's do this. So that's kind of how that entire discussion manifested. But today we've got you on officially on the Boom Room. We're going to talk all about tokenomics. We want to dive into your roles at Open Campus and the experience over the past number of years at Animoca Brands, which we've seen make tremendous changes in the direction that they're heading in. But before we do that, we want to ask you the same simple and boring question we ask everyone in this interview, the same way we start every interview process. Give us an idea. Who is Mo? What is your experience within entering the world of Web3, and how have you gotten here today to speak with us about Animoca Brands and Open Campus?
That's a deep question. I love it. Mo is a husband, father of three, a mathematician, an ex-teacher who really found his way into crypto before it was called Web3 in 2017. I was sent the Bitcoin white paper. Being a mathematician, I geeked out and I very quickly discovered ICOs. So I was buying Bitcoin and Ethereum to on-ramp into shitcoins, which made me and then lost me a hell of a lot of money. So I sort of went boom. So we're in the boom room. So I went boom, but I also went bust post post that, which was an eye-opening experience because you don't expect to lose, or when you've grown a portfolio from five figures to seven figures, you don't expect it to go down to four figures over a 9 month process. But that was my baptism of fire, if you like. But I was a high school teacher for 10 years teaching mathematics. And at the time, I was a high school teacher. And one of the things you're taught is to be resilient. I'm a big believer in the growth mindset as well. And I'm a problem solver being a mathematician. So for me, it's why did I lose this money? Right, it's gone. I can sit and cry about it and be depressed, but that's not going to change the fact, what can I learn? And that's when I discovered a lack of understanding around tokenomics in the space, probably mid 2018. And it was all right. Layer one tokenomics we had figured out. We had Bitcoin, which had a very good mechanism in terms of the halving. We had Ethereum, but we didn't really have anything else at the time. I think there was Stellar, maybe Litecoin as the fork of Bitcoin. Cardano was recently launched. I think Solana did their ICO during that time as well, but wasn't active as a chain. So there was some understanding of layer one tokenomics, but there was zero understanding of any other form of tokenomics. So that's when I really started my journey. And this is something that needs to be solved. Fast forward to 2021. I was approached by Animoca Brands. They're like, "Oh, we've seen your profile. You're a mathematician. You're a teacher." At that point, I was the head of department. I was part of the senior leadership team. You do tokenomics. We've not seen this kind of profile before. Let's have a chat. We had the chat, and I ended up being given the opportunity to found the tokenomics department within Animoca Brands in 2021. And sort of fast forward to today, we've worked on numerous projects, some that never launched, which is I think at some point in the future I'm going to do a series on some big IPs and partnerships that were there, but we never actually pulled the trigger on what could have been. But
Hmm.
in terms of what was able to work on ApeCoin was probably my very first big project that I was a part of. There was a baptism of fire again in terms of learning there and working with such big partners. More recently, maybe in the past 18 months, Pixels was a big one last year. Open Campus, our EDU token, which we'll get into later on, Mochaverse with Mocha token, and a number of other tokens that have launched with varying success, which I think is super important to say as well, because there's always learnings in what doesn't work, especially being a mathematician when we're hypothesis testing. So more recently, I was voted in as president of Open Campus DAO, of the foundation, just given my history in teaching and education, given also that this was an ecosystem where Animoca was a large contributor to, and I worked very heavily. I consider myself a silent co-founder to that ecosystem. So stepping back in felt like a good fit to help drive that project in the right direction. And it's leverage all of my experience, my expertise, my network, my knowledge of education, to work within an existing protocol, something that is live, has a community, to help the team push it in the right direction and grow it from there. So exciting for me because it's a different set of challenges versus the standard tokenomics, which is a headache within itself.
Was that, by the way, was that a weird conversation when you were leaving your job as a teacher and to be like, hey, I'm leaving to work in token economics, and they probably had no idea what you were talking about?
So this is, I don't think I've actually shared this publicly before. With teaching, it's not that you have like a 2 week or a 4 week period where you have to hand in
Hmm.
your notice. It's done in like halves, if you like. That there are two moments similar to the football transfer window. You have windows of opportunities of when to leave. So I was sitting down with the head teacher at the time and trying to get an appointment with the guy to be like, this is what I'm going to do next. I am going to leave. And he kept on pushing the meeting until after the deadline. So he knew what it was about because I'd back channeled, so he knew exactly what the conversation was about, and he tried to be smart in pushing it post the deadline. Um, but there are also other ways to get out of contractual obligations. And for me, it was the most important thing wasn't the head teacher, it was the students. So it was finishing the
Yeah.
academic year, especially as head of a mathematics department, making sure that I was there with the students until they finished their assessments, they finished their exams. And then it was like, cool, I'm ready to go. And actually, I remember I was made the job offer in February or end of February, beginning of March of 21. And I got back saying, listen, I'm going to take it, but you guys have to wait till July. And they were like, why? And I call it teaching. I'm not leaving the kids until we finish the academic year. Like, that's my responsibility. And as lucrative an opportunity as this is, morally, this is what I need to do. I need to finish this so I can be leaving with a clean conscience. And that's exactly what I did. So it was an interesting conversation because the head teacher ended up shooting himself in the foot by trying to play chess, but he was actually playing checkers. And we'll leave it at that. They had no idea. They had no idea what I was talking about. It was a completely foreign language, which is probably
Yeah.
why they thought, we'll just keep him for another year. And it's like, yeah, that's not going to happen.
Oh man.
Yeah, they probably had no
Yeah.
idea.
Yeah, they had no.
Yeah.
I don't think they do, but that's all history now. It's in the history books.
They tried to
Well,
rug you.
They did try to rug me, funnily enough. Like I tried to get rugged in education, working at a government funded school. How does that work?
No,
I have no
it's
idea.
good. Maybe the prime candidate for president of Open Campus because you tried your best not to rug those kids and make sure there was some continuity in their education. So that's fantastic. I wanted to ask this question. Oh, go ahead. You were just about to interrupt me.
No, no, no,
Feel
no.
like you were
I
gonna.
was gonna say, sorry for interrupting. I was gonna say it's like part of the reason for Open Campus as well as our special counsel for a year on ApeCoin DAO, and the purpose of running initially for that position and coming in was with tokenomics, especially once a token is live, there has to be that iterative process to improve based on where the ecosystem is at, based on where the community is at, based on where the product market fit is at, etc., etc. And coming back into ApeCoin was around how can we upgrade governance? How can we upgrade staking? How can we upgrade really the ecosystem now that we have an Ape chain, now that there are some products, we found some kind of PMF. What does Ape 2.0 look like? And that was the purpose of going back. And there was some success. I mean, by the end of it, the community had voted to shut down the DAO, which was very upsetting because you can argue it was too little too late to come in and try and make the changes. And the DAO had been operational for a number of years prior to that with no success or very limited success. There were some success stories in terms of empowering the community, in terms of just funding the right initiatives. But it was also a popularity contest. So normally the wrong
Oh
initiatives
yeah.
were being funded, and there was no ROI coming back into the treasury. But also there was no incentive alignment for that to happen. There was no reputation layer on the voting. A lot of the things that we tried to introduce, but at that point it was too late. So for me, and that you probably see a theme, if something doesn't go to plan, it's always how can we iterate, how can we improve, and then where can I apply that learning? Which is why when the open campus opportunity came up, coming off of the back of a defeat, and I did feel like Ape, or my time with Ape, was a defeat with what I saw as being the North Star and what we could have done in terms of empowering the community, as opposed to the DAO shutting down and Yuga taking over control through ApeCo, for those who are interested. Which is a for-profit organization versus it being and centralized versus it being a decentralized DAO, or decentralized foundation via a DAO. It was just like, okay, there's all of these learnings. How can I put these learnings to use within a very different ecosystem, which was open campus? So that was another big motivation as well. It's just like there's so much learning here.
Yeah, we probably have about 1,000 topics and questions for you, especially on governance and decentralization. But before we get into the fun stuff, one of the most fascinating questions we could possibly ask you, and we've heard differing opinions from every token economics builder in the space, more or less. But we wanted to hear, like, what is your high level definition of tokenomics for all of the people watching that are probably wondering, I've never heard of this term, or I've heard of this term and I still don't understand what it means. So if we just curious to hear, because everybody defines it differently, you know.
And maybe also, how has that definition changed over time? Because there have been so many changes in the space.
It's a good point. Yeah,
100%. I mean, I'll give the boring definition first, and then we can dive into the spicier take. Again,
I love it.
tokenomics, token, economics, supply and demand, incentive alignment, etc., etc. That's the pie chart, the distribution schedule. That's what we're used to seeing when we think of tokenomics. The way I and the team think of tokenomics is actually it's an onion. Outside of the fact that it makes you cry, it has multiple layers within that. And there has to be some pun with me. You know this, guys. You know this. But it's the multiple layers, and sort of to Sasha's point, what has the evolution of tokenomics looked like? What we saw as an industry initially with Bitcoin was the distribution schedule, which include the incentive mechanic within there as well. So that made sense as a layer one. But in 2017, maybe when we saw the rise of ICOs and the word tokenomics being brandished around more frequently, it was a pie chart. We didn't even have the distribution schedule back then for the majority of projects. It was just, here's a pie chart, this percent to the team, this percent to advisors, this percent to the community, and it would be based on the KOLs and who can pump what token. For those that were
Yeah, yeah.
around back then. And then we had DeFi. And we had the DeFi summer in 2020, and that's when we saw an evolution of token economics, and we saw the introduction of governance, maybe outside of the Ethereum DAO with the hack that happened in 2016. But we saw the evolution of tokenomics in terms of, all right, now I do need an incentive structure which is tied to governance, and I like to use oh shit, my mind's gone blank. I like to use, is it Compound? Who introduced the VE tokenomics? My mind's gone blank. Was it Compound? Or was it someone else?
Oh, I've seen so many iterations of
Yeah,
voting escrow tokens. It's hard to know where it came from. Maybe it was Compound Finance.
it could have been. It could have been. It was one of the earlier ones. We'll come back to it. We'll remember the name later on. We can edit it in. But they continued to. It wasn't Compound. No, it wasn't Compound. They fuck. Why is my mind going blank? Like I should know this off the top of my head. But they continued to iterate on their tokenomics by having the initial token and then introducing the VE token, where you're locking up your tokens with the bribing functionality, and we started to see a needed shift in token economies. And sort of fast forward to today, coming back to this layer analogy, it's we still think of it's at its core, it's still supply and demand, but its supply and demand touches so many different actors that what we've seen, especially in this industry, your go-to-market is so important. You can have the best design tokenomics with the best simulations that are Monte Carlo complete, but if it doesn't have the product to match and the go-to-market strategy to match, you're not gaining user adoption to hit that critical mass to power that flywheel to begin with. We've also seen a couple of years back the rise of every project having its own layer 1, layer 2, layer 3, because at the time it was a great way to add a zero for a short period of time
Oh yeah.
to your valuation. But very quickly, it's just like, okay, like I think of layer like blockchains as operating systems, and it makes sense for different projects to want their different operating systems because they can retain the value within that. You lose some of the network effects because people are not bridging liquidity across as much. But if you're able to find that critical mass of liquidity, then you need to upgrade your incentive structure. And it's something that, for example, Pixels is a great example where Pixels launched. I think there was that initial, the go-to-market was great. Why? They were able to tap into existing communities within Web3, and the mission was simple. This is the purest form of play to earn gaming, which is why what Luke and the team have been doing, they've been continued trying to iterate, trying different staking mechanisms with different reward pools based on monetization within games. So again, you're getting these different flywheels there. That's a good example of a tokenomics that's continued to iterate. Other examples, and if you guys want to pause me and take the direction in a different route, please do, because this
Well,
was meant to be a definition, and I've gone off on a
I want to
tangent.
ask you, man. Like we talked about this before, and the interesting thing about tokenomics that I love, I know Carmelo loves, and you mentioned this is something that has been like close to your heart as well. Is it's such a broad field, but very critical, and so it requires you to become this sort of startup ninja. It's important to have a fundamental understanding of many different business focus areas: marketing, legal, business development,
Yeah.
finance, and fundraising. And there's a lot of these business focus areas that Carmelo and I have become like de facto experts in accidentally, just by trying to figure out how we can build better economic structures. And like corporate framework structuring is a very good example. Understanding compliance and regulation in certain jurisdictions, especially when you're trying to target users in certain countries. Marketing is a huge one because you mentioned like there can be a massive misalignment in incentives and expectations when you're actively tweeting like airdrop coming, guys, make sure you don't miss this, but you're trying to get all these people like crowdsource information or data for some like agricultural data network, for example, right? Like there are a lot of companies that kind of miss the buck on that completely, and they all end up in like the graveyard of valuable dead IP, unfortunately. But I want to ask you, like, what are some focus areas that you've been surprised that diving really deep into in this journey?
I think it's very quickly to close off the previous question with the onion analogy. Like
Yeah,
you've
yeah.
mentioned, a core amount of the layers within the onion, and for a lot of founders, it's wait, all of this ties into the token.
Mm.
How? And that's why I feel tokenomics is overlooked, because it's like opening Pandora's box. Once you see it, it becomes very difficult to unsee how all of these different nodes within a network, if you like, interact with one another. But I feel one of the biggest challenges to your question is a lot of founders feel TGE is the endpoint,
Mm.
whereas it's the birthplace. I mean, my wife hates it when I use this analogy, but TGE is like childbirth. It really is. Like you have your first, second, third trimester, which is the run up to TGE, and crypto Web3 is an attention economy. The time you have the most attention on your project is when money's involved, is when TGE is involved, because that's where there's financial value that's about to change hands. If it's through airdrops, if it's through different incentive mechanisms, if it's through different questing platforms, etc., etc., that's where the value comes to life. And for a lot of founders, that's where they switch off. They think, excellent, TGE is going to happen. My investors are going to be happy because they've been doing my head in all the time. When TGE, when TGE. And then a token goes like this. It dives off of a cliff. Exchanges for me are a big problem, or the way they're currently structured, because the incentives aren't aligned. Each exchange is looking out for its best interest, which is why they're charging a marketing fee, some kind of advisory fee. You have to pay a deposit. And all of a sudden, projects that are ready to launch realize I maybe need somewhere between 500K to 2 million bucks to actually list. And then they go waste another 6 months trying to raise the funds. And sometimes they're successful and sometimes they're not. I think for founders listening in, it, exchanges are a great asset to have if you have true demand on the token, and the people who want access to that token have access to the exchanges. Otherwise, you're giving it to people on
100%.
exchanges who are just going to dump, and that's one of the issues. For us, the past maybe year and a half, we've been focused on, again, the moment of childbirth is the moment when life comes, or a project comes to life, and that's through the value of the token. And that initial distribution is so important, that making sure not only it's getting in the right hands, but how you can design a mechanism that if it's getting in the wrong hands, and by wrong hands I mean your paper hands, or your farmers, people who have there's no longevity within the ecosystem. It's just, I'm here to grind. I've added some form of value because you've increased metrics on Twitter, or you've downloaded the app, or whatever these metrics are. You've traded or you've bridged some of your assets to our chain. Whatever the quests are, you've added some kind of value, and you do deserve some kind of value back. But that value back doesn't make sense for it to be in the hundreds or thousands or tens of thousands of dollars if the value that you attributed wasn't enough. But also, if you're not looking to stay here within this ecosystem post airdrop, am I just here to come and farm? And a great example, one of the biggest frustrations we've had is we're advisors to founders, and it's really up to the founders whether they take this advice on board or not. And one of the biggest challenges is, like we said, once you open Pandora's box, founders very quickly realize that there's a lot of now known unknowns that they have. So they start leaning into their network, which is their advisors, their investors. And what you hear from different stakeholders is very different messaging based on what their underlying motivation is, which is a complete mindfuck for a lot of founders.
Yeah, yeah, absolutely. And it's like almost the same exact thing that you see in the world of venture capital and investment. There's a lot of direction that's coming from investors in the cap table, and more risk associated with investors that happen to be on a board of directors for a company, where you might have an idea of what their agenda is or what their end goal is, but they're not going to clearly or explicitly say that to you sometimes. And so they might push you towards decisions that are going to maximize profits. And that might be, when a token's involved, short-term profits by increasing liquidity or listing on some exchange they have easy access to, etc. But yeah, I'm Mello. I've been taking up too much time, man. Dive in. I know you got a million questions also.
No, it's great. I mean, we planned for this and we have plenty of questions and topics, but like I'm just going with the flow. Like this is it. I love talking token economics, and I wanted to follow up to that last question because I personally love dissecting terms and like these weird buzzwords that we invent in the industry, like DePIN or whatever. DeFi is a funny one too, and we heard Web4 yesterday and hyper casual finance. But I wanted to ask, like, do you think there's a better term for token economics? Because we've heard tokenomics versus token economics, and how they might actually be two different things, but we've heard differing opinions for all of this stuff.
It's ironically enough, I was speaking to like a member of the tokenomics department just before jumping on here, and one of the key takeaways of that call is token economics doesn't do us justice as a term. I feel, especially those who understand what it actually means to be a token economist, we do so much more because you're having to wear so many different hats. I think, Sasha, you were saying de facto you've had to learn. I think, actually no, Carmelo, it was you. De facto, you've had to become experts in other fields or have a lot more information because tokenomics touches so many different things. So I don't feel tokenomics is the right term. But then I feel if you go too or too vague in something like solutions architect or something like that, you lose the true value of what we bring. So I feel there's definitely, the naming convention is up for grabs. I feel there's a stronger naming convention for us, or for token economists. What that is, I don't know. Or maybe then it
It's
can be because there are so many subcategories within tokenomics, like you mentioned, the legal and regulation that plays an important role. The gamification aspect it plays an important role. The monetization plays an important role. The strategy and design, the governance. There are so many different layers there. It's maybe we've grown so much as an offering of what tokenomics is that there's maybe tokenomics is the umbrella term, and within that umbrella term, you then have different specializations.
yeah,
Yeah,
it's interesting. Oh, go ahead.
no, I was just gonna say, like, going back to your journey into it, like you're a mathematician by trade, but do you need to be a mathematician or a spreadsheet expert to get into token economics? Like, you also could be a psychologist, you could be a historian, you could be a marketer. Like, what are with these different aspects? Like, who is the best candidate to get into token economics, and how do people even find jobs in this space since it's so new? Like, that's why Sasha and I love it, because it's like a not very defined space still after several years.
Oh, 100%. And I think again that you mentioned loads of different skill sets and backgrounds, and back to the onion analogy with the layers, you have like jacks of all trades who will understand all of the different layers, which are very important. But you also need specialists in specific layers. Or that jack of all trade could be the strategist, if you like, because they understand enough across the different verticals within tokenomics. But then you have the specialists within those verticals as well, where when it's time to dive deeper into the low level, you have that expertise that the strategist or the generalist wouldn't have. So I can see there on the marketing side, the legal side, someone coming in from psychology, especially when we talk about an attention economy. How can you maintain attention? That's on the psychology marketing side a lot more than the
Yeah.
gamification side. The gamification brings you the retention, but you need that call to action to bring people in initially. So it's, I mean, it's your what's it called? It's your live ops once a product is live, and within the live ops, you have different layers within live ops as well. So I guess if it's pre TGE, you need specific skill sets, and then post TGE, those skill sets slightly change and evolve,
Mm.
dependent on the need of that ecosystem or that token ecosystem.
Yeah,
Yeah,
it's
absolutely.
interesting seeing like how that role as a like a token economy advisor does evolve in these different stages, because the support that's required to help some of these companies is completely different, like you mentioned. This live ops support versus like building up to the token launch, completely different companies at different stages. And it's interesting that you mentioned like you have this onion, you have this like confusion around this term, and it doesn't do justice. It's hard to encompass a lot of this, and unfortunately for us, like a lot of times we work for companies and help design the token economies, the digital asset economies. The amount of scope creep is wild. And it comes down to, like we need to consider, like they think that it's just in this bubble. Like if I'm building like Uber, then like you've got Uber, and then you've got Uber Eats, and then you've got like some like dog walking thing. Like, oh, tokenomics is that random dog walking thing that's not connected to anything else. No, it's actually connected to everything. And the work that we focus on, we have been referring more to it as protocol design lately. And so it's
Mm.
not just cryptocurrency and NFTs and stuff. It's the entire business model of the company. And we had a kind of strange moment the other day. We're working with a client right now, and we had worked on this protocol design process where we're talking about like there's a fungible token, and then there are other types of fungible assets, and then there's the actual business model that's core to some other thing, but there's value accruing somewhere. And then you've got the promotional strategy, and then you've got like a community growth strategy, and all of this coming together. And we sit on this call with this team, and we're reviewing this massive document that covers everything. And they said, you know what, guys, like this, we need to make sure that there are a few things that are cleaned up here, and we change some of the designations around, because this document is now going to serve as the single source of truth for our entire business strategy and business plan. And everyone in our company needs to refer back to this. And that's like the core of it, right? It's not just some token. It's like, how does this fit in with how you want to gain users, or how does the company make money, or how do you approach new partners to build on your network, things like that. And also a big part of it is like, if there's a fundraise involved, how are we going to leverage these digital assets, if it's part of equity or if it's just like a SAF via token sale,
Yep.
that we're going to try and onboard capital for one reason or another. And how are we going to communicate why we're onboarding capital, what we're actually using that for, and how we're going to use those funds. And this gets into a really interesting topic that I've been dying to ask you. Again, we talked about this a little while ago, but I'm trying to see like how your perspective has changed. The idea of using a token for a fundraise. And it seems like as time's going on, it's becoming more and more clear that this is becoming a bad idea. And it's a shame, because Carmelo and I have designed token economies that had such great use cases, amazing innovation, incredible incentive alignment, but maybe something happened, like they brought on the wrong investor in the cap table, and everything ended up failing, right? So what's your opinion now on, and how has it changed on using a token for a fundraising effort?
I think it's a really powerful question, and I think like it really does depend, like what we're seeing more of, or maybe to take a step back, the, the expectation I believe needs to change, that not everyone launching a token is going to hit $1 billion market cap and beyond. We have to start realistically thinking about what range of market cap makes sense. So am I in the $1 to $10 million market cap? Am I in the 10 to 50? Am I in the 50 to 200? Again, you can split the ranges however you want. But also that it comes down to the product as well. There needs to be a product that people are interacting with. Again, at the protocol level, slightly different. But if I have a product that's generating revenue and there's monthly recurring revenue coming in, et cetera, then it becomes easier to tokenize and easier to design a token economy around it, because you already, to a degree, know your supply and demand, your sinks and faucets, who the different core actors or stakeholders within your ecosystem are. And so you're not starting from, we think this is going to be a good approach and here's the hypothesis behind it, but more so there is a business generating revenue or an MVP with some monetization, and we can design around that. I feel that's one of the solutions that we're going to start to see more of. And at this point, that's when it's just like, so what if it's a $10 million or a $50 million market cap? That's enough because we only have 5,000 true fans who are paying a monthly subscription. That is self-contained and it's hit critical mass that it can continue to operate without it needing to be at a crazy valuation. But also then coming to the investor perspective, well, if I'm an investor investing in the token, it then depends what kind of investor am I. Am I one of the many VCs in the space that is just someone who made money in crypto, decided they were a VC, opened up a firm, were the biggest LP for their own fund and managed to get a few friends to come in, and now they're a VC who's only after ROI? Or am I a strategic investor that, yes, I'll give you the money, I'm happy to be locked in for a period of time, but I'm also going to come in to assist and help in your growth? I feel that we talk about stakeholders within a token economy, but your stakeholders or your personas within your investors are super important to onboard the right investors. So you're not under pressure, launch a token. I need tokens at TGE, where it's just then the sell pressure coming in. I feel, on the other hand, so we spoke about product first and then token. There are instances where it makes sense to go token first, where you're trying to build a community around something that it's difficult to have a single product around. And I think Open Campus is a great example of this, where if you're disrupting education or you're looking to upgrade education, where do you start? Because education isn't just, we're going to go to unis and fix this, or there's something wrong with education financing, or there are so many different stakeholders in so many different jurisdictions, and there are so many different roles. I mean, if tokenomics is an onion, education is acres and acres and acres of onions, in comparison. So going for an education protocol first approach made sense, because then you can put the token holders in the hands of the right participants who can then begin to put proposals forward to the DAO, and you're able to find the right partners that way. And that was the approach we took with Open Campus, where we knew education as a whole was too big to take on alone. We never wanted to take it on alone. It was always the case of, how can we find the right partners and how can we have the right mechanism, structures, and then incentive alignment as well, so we can work together. And one of the beauties of the approach Open Campus has taken is, even though we're a DAO, it started off very centralized at the beginning. Why? We'd learned from other DAOs, and ApeCoin was a great learning point even prior to going back in, having seen, if you're too decentralized to begin with, without having any reputation layer, it becomes very difficult to trust what's coming from the community, because you don't know, or not, you don't know. I'm voting on something that is, someone wants, I don't know, $3 million to build out a platform to do something in the healthcare industry. That's not my area of expertise, but yeah, I'm one of the largest token holders, and because I don't understand it, or they're not my friend, or they didn't reach out to me beforehand and I have an ego, I'm going to vote against it, purely because it's one token, one vote, which is great for onboarding everyone, but it becomes super challenging for getting the right projects invested in, because those who are voting don't have the right business acumen, or just acumen in general, to know whether this is a good vote or a bad vote. That was one of the challenges. So as opposed to having multiple, or as opposed to being a lot of low level improvement proposals coming through, we wanted to go for bigger partnerships. So we had a $10 million global educator fund to begin with, and the purpose of that was to incentivize teachers to create content. And then we hit a problem. We only had one distribution platform within the ecosystem, which was aimed at your younger years, so like you're 4 years old to about 12 years old. So all of a sudden, there's a mismatch there, where we're bringing on content creators to create content, but our distribution platform isn't hitting the right target audience. So what do we do next? So we need to increase our distribution platform. So then there was another $10 million fund, $10 million proposal to create an accelerator. We've gone through 10 cohorts of that accelerator. Over 60 projects have been given some kind of funding, be it
Amazing.
grant funding or investment as well. And now we've grown the ecosystem. We even have our own layer 3. Why? Because we want to be able to settle things on our own chain, or provide that solution where we're in control. I say we're in control of the token. We have access to the token, so we can help with Web2 institutions coming in who have no idea about tokens, right? You don't need to go buy from the open market. We'll load up your wallet and off you guys go. We're seeing it as an education operating system. Why? Because operating systems there's always improvements, there's always new additions, there's always updates. So what do we have within the operating system as of today? We have on-chain credentialing, which is super important for universities. We've brought $1 million of student loans on-chain. This is a $3.7 trillion industry, more or less the same size as the crypto market cap, which is about 4 trillion right now. So you talk about an industry, student loans alone, the education industry is in the tens of trillions of dollars, if you look at all of the different moving parts. So you're looking at an industry that's bigger than crypto as well. So how can we start to, again, we have the financing, we have the on-chain credentialing, we have a number of different partners in terms of universities and education establishments, and how can we start solving problems and finding more partners for us to grow? So that was a long answer to the question of, well, you can go product first, have the monetization rails, and then expand with a token. And that the way the token really is your growth engine from an attention perspective, user acquisition perspective, rewards mechanism as well, governance if need be. Or you can take the other approach, which is protocol first, where this is a very big idea and we need the funding to then find the right partners. That I think is harder and harder, because there's how many verticals are left that don't have that, like that big player in that vertical to turn around and say, we think we can be that big player. So let's raise all of these funds. Let's have a treasury and let's start funding growth. I think it's harder to do today. And we've seen examples of product first, even Web3 products. Hyperliquid, I think, is a great example of product first. And you've seen, again, tokens are always judged by price action. That's how you judge
Yep.
the token economy. Hyperliquid's price action has been insanely good in terms of the initial growth it's had, and then it's settled in a range as well. We haven't seen that big 90% drawdown that you tend to see. Why? Product first, PMF hit critical mass with users, then you have all of the ingredients you need to have a successful token economy that you can then continue to iterate and grow from. Kaito to a degree, but Kaito, again, there's some challenges there because they're missing that reputation layer. It's just every campaign is independent, and it's just like, well, we're rewarding the wrong actors, and we're quickly seeing all of these bots. I know I'm sick and tired of all of these bot replies on my Twitter as well, which
Oh
is
yeah.
like, what happened to real interactions? And you go through the followers and you can see this is the bot account. It's so frustrating. But anyway, yeah.
Yeah, not just that, but the AI slop researchers that, they're real people, but they're just printing out nonsense
Researchers.
just to earn, like it's frustrating. Yeah. On that note, just to take a quick step back, I think Sasha probably has questions too, but I'm fascinated by like decentralization and governance and why DAOs haven't really taken off. I mean, obviously DAOs have existed for quite some time, but we've not seen really much mainstream entrance by DAOs into the public consciousness. And we're wondering why that is. Like, can it function? As you rightly said before, everybody cares about the money. So around the token launch, people are interested when the money's flowing. So can DAOs only work when money's not involved, or how do you get people caring about governance and their reputation and participating in these systems when there's no money involved? And on the other side of that, how do you put the keys to a huge business in the hands of thousands of people? Like we always make this weird analogy. It's like 1,000 people yelling at a kid on how to run their lemonade stand. Like
Yeah.
nobody can run a business like that.
I mean, I think, what do I think? I think there are a number of reasons why. Number one, and you've heard me say this a number of times, reputation. Like in a business sense, you have your CEO, they have the reputation, your COO, that there's a clear corporate structure that's there, and there's clear mandates, there's clear responsibilities, and clear lines of accountability. That's why we've seen businesses have been a lot more successful in their structure because of that. Within DAOs, you lose a lot of that structure, which is great for chaos. I want to say chaos chaos breeds creativity and it breeds great ideas. But at the same time, you need to find a balance between chaos and between that structure.
Yeah.
And without a reputation here, it becomes very difficult. And we went over ApeCoin DAOs as an example. There's many more DAOs as well that cease to exist today that existed
Mm.
2 or 3 years ago for various different reasons. So I feel one aspect is, and this is what we're doing with Open Campus, it depends on what's the purpose of the DAO to begin with. A lot of the DeFi DAOs, they're outright ROI. So that
Yep.
kind of DAO makes sense. And where it's one token, one vote also
Simple.
makes a lot
Yep.
of sense because it's outright the decision I make has a direct impact on the value of something. So the more I have of that, the more say I should say, or the more say I have. Better or worse, as a basic mechanism, it makes sense. But you apply that to culture DAOs or to non-DeFi DAOs, and that's where it falls apart because the experience isn't in the money making, or you're not going to see the direct impacts of these decisions in a short time frame. It's normally a much longer time frame for you to see the value that's brought back in. So it's actually how can you can still have a DAO, but how can you have a centralized unit within the DAO that's voted in where it's run akin to a company, and then you can start to progressively decentralize. One of the things we tried to do with ApeCoin DAO at the time was actually split it in half, where we still have the
Hmm.
decentralized, we split the treasury. We gave, or this vote was actually passed. I think we gave 75% control of the treasury was still to the DAO, to the community, but we gave 25% and we brought in a CEO, for want of a
Hmm.
better word. For
Yeah,
him,
yeah, that's
now
great.
we have someone we can hold to account. Now
Yeah.
all of a sudden and the accountability is so important because as special counsel, it was very murky. I mean, our remit was we have to look through the AIPs, make sure they're fit for purpose, have a vote internally, and then put them up for vote. That was the
Hmm.
mandate. But outside of that, it was grey in terms of what else were we mandated to do. So every special council member would, based on their experience and their expertise, would try and do something to bring in value. But there was no structure around it, which is why it was very difficult. Whereas if you have this more corporate-like structure, responsibilities are clearer, accountability is clearer, but also the reputation begins to build. And when I say reputation, this could be on-chain reputation, as we're seeing with like a lot of the decentralized IDs, or it could also be just the off-chain reputation of I've come in, I've been in place for a year, I was given this was my mandate, this was my budget, and this is what we've achieved so far, and this is where we're at. And a lot more openness. We say there's a lot of transparency in Web3. I don't think there is a lot of transparency in Web3
Yeah. Not
outside
at
of
all.
what's on
No.
chain.
Yeah.
So DAOs have been challenging. And I think when we go to culture DAOs, it's how do you set up the right sub DAOs? And we can use a different terminology if we want. And you gave the lemonade stand as an example. You have a sub DAO in terms of what's the marketing for the lemonade stand. You have another sub DAO, what's the ingredients for the lemonade? You have another sub DAO, how are we monetizing off of this? Okay, now we know the ingredients. Where are we going to buy this from? How much are we spending? So you'd bring like-minded people, different areas of expertise together in a more slightly more structured setting than just a free-for-all as we've seen in Web3. And then you have your project manager or whoever it is to bring it all together based on how these different sub DAOs are functioning. Similar to what we see in a corporate environment, to be honest.
Mm.
But then you can
Yeah.
then you can truly begin to decentralize.
It's wild. You're like describing just a regular business. And it makes me think like, one of my biggest criticisms of ApeCoin and ApeDAO have been that it falls into the bucket of general purpose DAOs where the community is a capture of a snapshot of everyone in the world pretty much. And if you
Yep.
liken that to a business, it's like you have a massive warehouse or a building or a meeting room with thousands of chairs, and it's just everyone that's a token holder, they're in this room, but there's some little people and there's some big people, right? But they all have a voice, and it's just a bunch of people saying, we've got $500 million, what are we going to do with it? And I think that's how like Ape Water came to be. And so I've kind of been very adamantly against these general purpose DAOs. We've seen the cycle and what it looks like in going up and then coming right down. And the idea of a purpose-driven DAO, I think, is much better, right? You mentioned culture DAOs, which I kind of love this term because you're attributing value based on getting in value that's something non-monetary. And that's the way that reputation, whether it's on chain or off chain, if you're tracking
Yeah.
on chain actions nowadays using like Kaito or other platforms, it's very possible to build an on chain reputation using like social interactions and things like that. But that's one of the best ways to assign reputation to a purpose driven DAO and then grant a greater voice to people that have a stake. And going back to the lemonade stand experience, right? If you've got customers that are actively buying lemonade every day, they're consuming your product and they're a fan of lemonade and they're a fan of your lemonade, then maybe you can use some of this information to give them a voice in how they might want the business to change if they end up being a stakeholder. So I think that's very powerful. And going back to this massive topic of open campus, like it's almost a general purpose DAO, but it's an industry DAO, right? And so I'm wondering, like, what are your thoughts on how when I'm assuming eventually when this goes more towards the direction of decentralization, how are stakeholders going to be identified? How are reputations going to be boosted? How is greater voting power going to be assigned to people with voting rights from token holdings? And then how do you bring all of that together in an accountable way to move a massive business forward that's trying to, let's be honest, change the world when it comes to education?
I think great question. I think it's progressive decentralization. So the Open Campus DAO is 2.5 years old as of now. When we first started, it was your standard foundation setup. You'd have your 5 board members or special council members or whatever terminology we want to give to them. And actually, that's what Open Campus had for year one. But over the course of year one, it was finding the right partners to begin working with. And through working with these different partnerships, one of the very first partners we worked with are actually New Campus, who are running the accelerator, who are running our incubator as well, who are helping on the operations side of the DAO. We have great access within the education networks or great education ecosystem. And it's like, right, we found a good partner. And then in the following year, it was right, we're now ready to expand and have some sub DAOs, have a couple of sub DAOs that were there. One of the sub DAOs was for the accelerator, in which I was voted in as one of the 5 people there. And it's just more the case to be mentors on the accelerator, but also to be voting on who gets funding as well. So then you sort of in that year we decentralized by an extra step by having a couple of new sub DAOs. And then this year we have a number of new sub DAOs as well. Why? Because we found partners who have already proven themselves that when it comes up to the yearly elections, it's more the case of how can we decentralize year on year based on the participants we have within the ecosystem and also based on people providing value first, showcasing that they're worthy, and then you begin to decentralize. So that's on the governance side. I feel on like it being a general purpose DAO, yes, but it's a general purpose DAO with a focus on education, which then, and this has been the challenging part because education is so big and so there's a lot. Education can mean different things to different people. It's where do we focus? Because we can take the credentialing, for example, and go to universities that are struggling with or employers who want to make sure, or let me take a step back. One of the biggest issues on LinkedIn right now, if you're an employer looking for someone, is you don't know. It says I've been to Harvard. I can also say I've been to Yale. I've also studied at Oxford. I'm old enough, like I'm in my late 30s. It could be true, but how do you know? How can we verify? How can you also verify the education that happens outside of the classroom? There's no verification there. So there's a clear gap in the market there. So with something like this, what does the distribution of that look like? Are we going for private businesses? Because there's a lot of upskilling of the workforce. Are we going for universities and saying, listen, this solves a problem for you guys? Are we going to platforms like LinkedIn and saying there's a solution for the problems that you have as well? It's just like, well, what's the, well, we know what the product is, but how is that product going to market? Who's the initial market base, user base that we're going for? And that's one of the many verticals within education. Student financing is another one. Great, it's a great solution. Where are we going to the market? But also, how does this tie in with the rest of the ecosystem? How does it tie in with governance within the token, et cetera, et cetera? So it's more the case of how can we take it a chunk of time at a time and always making sure we're reflecting as we're going through these processes so you can course correct. And even with that, it's not a foregone conclusion that the output is always going to be the best output, but
Yeah.
you've created a much better structure, or you've increased the likelihood of success because of the approach you're taking, and also making the stakeholders you're onboarding, and the reflection process of, all right, let's look back at what we've done. Let's see who's been a good stakeholder. Let's see where the market is at. Let's also see, I mean, monetization is super important and education is super difficult to monetize in. So let's also look at different forms of financing that we can get our hands on, which isn't necessarily just going to the investors in Web3. There is access to funding in Web2 through grants, through foundations, etc., etc. What do we have within our ecosystem that matches the conditions for this? And the interesting thing is, we're at the crux of technology because we're leveraging blockchain, AI to a lesser degree. It's education so that it's impactful. So for a lot of funds, for a lot of, again, on the Web2 or traditional side, we tick a lot of boxes to be able to get grants. But because it's a Web3 protocol, the focus up until recently has only been on Web3. Yeah, education is a hell of a lot bigger than Web3. Or our birthplace was Web3, but we were born in Web3 to go and upgrade Web2, versus projects who are coming from Web2 trying to suck value out of Web3.
Man, I want to just ask you a quick follow-up question. Maybe it's not going to be a quick answer, but if we're talking about like this is an incredible concept, and if you guys continue to develop traction and the footprint grows, you onboard new universities, new high schools, new primary schools, new educators, new decision makers. That's incredible. But I'm concerned around token-based voting and governance still, and like let's just play devil's advocate, right? Like we my grandmother doesn't know what the hell crypto is, and if there is some sort of barrier here, then is there a chance that open campus is going to onboard decision makers into this education focused DAO that are only the ones that are crypto literate? And that might mean that these individuals, maybe they are 5, 10, 20, 50, 80% more degenerate and financially irresponsible because they know about crypto, and that could affect the business, right? So is it like a challenge of onboarding teachers and educators and deans into crypto, or are you guys going more towards like account abstraction and just trying to figure out how do we capture everybody, make this seamless, but ensure there's accountability and on-chain transparency?
I think great question. The challenge maybe up until 12 months ago, 18 months ago, is the tech wasn't there. And like you said, to abstract away the blockchain, to abstract away the why. The end user in general doesn't care about the why. They care about, it's a platform, there's critical mass around this platform, and it solves a problem for me, and there's connectivity around that. So it's a lot more in terms of what does the front end user experience and user interface look like. And I feel that's where, and I know we speak about open campus, but it's like generalizing, that's where we're struggling as Web3, is that we're building products for Web2, but we're incentivizing users in Web3 to come in, and we're not finding any stickiness to these products because we've done the airdrop, we've done all of these mechanics, we've had the attention, the airdrop happens, the token goes live, and everyone extracts value and don't actually care about the underlying platform or the purpose of that. Whereas sort of bringing it back to Web2 users, we've hit critical mass of people who have come into Web3 or Web4 or crypto or whatever you want to call it, for the morality, for the decentralization, for the way it empowers us, for the ownership. For everyone else, I think it's now the education will come, but it cannot be necessarily that you need to learn how to custody your own assets. You need to learn to bridge. You need to learn to do these things. That cannot be the learning we're expecting of normies. It's more the case of, how can I sign in and I'm dealing with a platform where my user experience is the same as if I'm on Facebook, if I'm on Instagram, if I'm on Amazon, if I'm on eBay, if I'm on Fortnite. I don't know if I'm on Steam. That's the user experience that we have to be aiming for. And then once people are onboarded, regardless of what the platform does, it could be buying Pokemon cards. I mean, we're seeing Pokemon having a big resurgence on the timeline. Why? Because it's an RWA. It's an RWA where the existing infrastructure is enough for crypto to tap into, and for people to be able to monetize. So that's become a big narrative. Where was I going with this? I've lost my train of thought. Sorry, guys.
No, this is awesome. I mean,
Yeah.
we're
So
so talking about
hit
like
me back. Hit me back. Your front
no,
ends.
no,
That's it.
like you've answered it.
User experience. Yeah, yeah. User experience. Sorry. Yeah, yeah. Sorry. Back to you. Back to you.
You've answered it. I think then, and we talked about this before as well. There's always going to be some level of centralization in these decentralized platforms, and that's kind of where like general purpose DAOs still they probably have the biggest barrier to success because like you need some level of decentralization for arbitration, for like hacks and account recovery, for dispute resolution and things like this. But yeah, I mean, like that's the future. That's what it looks like. You have the rails that are transparent and accountable, and then maybe you have like Chat GPT customer support. I don't know, something like that.
I mean, it comes down to what's the purpose of a DAO, and I think like to something we spoke about earlier. Not every token ecosystem has to be valued in the billions. Like I think as an industry, we're past that. I might have a DAO specific. I don't know. I'm based in London. A DAO specific to people who are in London who like to buy limited edition trainers, let's say. It's very niche, and there might be London is 7, 8 million people. There might be 10,000 people um, who are interested and who'd like to be part of that DAO or collective. Maybe let's use the word collective instead. Why? Because they're the ones who are buying, trading, selling these trainers, these limited edition sneakers. So you can create a DAO around that, where there's a treasury, and then people are funding the purchase of these sneakers to increase the value of the DAO, and that might have a market cap of $2 million, $3 million, based on the inventory and then the value of people who are contributing and holding the token. That still makes sense for it to be a DAO. Why? Because everyone has ownership, and I think this is the important part. It's less on the governance side, even though naturally we're saying the decentralized autonomous organization. It's more so on what's, and I'd say that that's a culture DAO with a clear business orientation, if you see what I mean. But that's something people can buy into. And then at that point, I'm not a part of one DAO. I might be a part of 4 or 5 DAOs, but I'm not holding the tokens necessarily just for the governance. But it might be the case that it's a DAO or it's an NFT. And my NFT contains my reputation based on the value I bring to the ecosystem. Um, so I feel we have to change our perspectives as to what we expect from a DAO, because DAOs began to exist because decentralized, you had to showcase you were decentralized, so the SEC didn't come after you. Like if you roll back a few years, which is why a lot of these tokens that were launching as DAOs, because the regulation at the time, that was the only way you can launch and be decentralized and it not be seen as a security. Yet we've had, at the time, the incoming president of the US launched Trump token, launched a meme coin a few days before his inauguration. So that changed the game completely. And with what we're seeing, A, the technology's come leaps and bounds since where we were a few years ago. B, the US, who have always been anti-crypto. I want to say the US, that's a catch-all in terms of the bigger organizations like your JP Morgans, but also government, SEC, have been against crypto, or at least on the face of it, have been anti-crypto. And in the last couple of years, there's been a big shift towards pro-crypto. In the past 9 months, we've seen that with Trump coming in. And again, you don't have the president of the biggest or strongest country in the world launching a meme coin, and it doesn't change the game. So another question is, do we even need, or do projects need to launch as a DAO to tick boxes? Maybe they don't. And maybe then you become a DAO later on once you have a sufficient number of users. And at that point, again, I think it's more of a collective or a cooperative where different people are coming together. But because of the technology, because of the ownership aspect as well, that's when a cooperative becomes a DAO. If that makes sense. If you start in Web 2 and transition to Web 3.
Yeah, it makes total sense. And I never saw it personally as, I mean, that is one of the functions. It was a shield against the SEC. Like decentralization is a shield, never really meant to be an actual decentralized organization. But, more it's a justification for fundraising and utility because a lot of times, Sasha and I, and you've probably seen it a million times, like this laziness, supreme laziness in designing utility for a token. And it's the easiest thing in the world to staple on governance and say you can vote on our logo's third alternative color. There you go. You guys are part business owners, and it's not really a utility. And I wanted to ask, like, do you think it's possible to even run a DAO right now? It's not limited by the tech, but it's limited by the fact that we need a financial layer. So, have you seen any DAOs that don't have that financial layer where you can't buy voting power, you can't buy reputation, you just you get more voting power based off of your experience and how much you've participated and how much you care and how much you know about the subject matter, like you said.
I haven't as of yet, and I feel a big reason for it. And if there is a DAO out there that is doing this, apologies. Please do reach out. I'd love to see. I think we all three of us would love to see
Yeah,
Yeah.
how
yeah,
you
for
guys are
sure.
thinking about this. So if anyone's listening to this and be like, you guys are chatting shit, we have this and we've had this for years. Please let us know. I want to be wrong about this, but I feel another aspect again coming back to the reputation layer. We have all of these DIDs, but how many of them are actually live? How many of them are actually accruing reputation? How are we seeing this reputation accrue? How are we seeing the dynamic nature of reputation change as well? And we haven't really seen that. So for me, there's a critical reputation layer that's needed alongside DAOs that we don't have. And I feel once, and then you have your Git, you have like your Git passport, for example, and that's a nice foundation layer for reputation in terms of, right, you've connected your GitHub repository, you've connected your X, you've connected your LinkedIn. We know you're a real person, and we know to some degree who you are and maybe what you've achieved um historically. But then it's just like, all right, this gives us a basic persona of who you are. Maybe we can have like 8, 10, 12 personas of different actors in the space. But then
Hmm.
how can you start accruing reputation? Am I someone who is just on the financial side? Am I someone who's on the product side? Am I someone who has an expertise in a specific vertical that if we're voting on that, my reputation should be 100x everyone else because I'm a fucking full-time PhD on this topic, for example, versus someone who's just an early investor who holds 3-4% of supply, who doesn't know what they're talking about. They just want to be able to cash out as quickly as possible. We're not there yet because a crucial layer of the technology hasn't been widely adopted within Web3 as of yet.
Hmm.
And there's loads of different DID platforms. And we have Mochaverse going for a DID platform. There are so many others going for DID platforms. And it's once we start seeing that, in my opinion, become sticky, then it becomes easier. Again, not easy, but it becomes easier to say, all right, this is the grouping, this is the reputation, this is how the token plays a part in it, but it's not the be all and end all of it as well. But that comes back to live ops, iterating based on the data that we have, etc., etc.
Yeah, and yeah, like we've seen that's why I wanted to ask, like, do you think it's possible to, like, it kind of muddies the waters if you fundraise against a governance asset. So, like, in the past, we've seen Uniswap, like, these sort of voter attacks, buy a bunch of the supply, just crush every opposition, make money, just dominating governance, basically. So,
Yeah.
this one vote, one token doesn't really work. But, like, aside from you're still able to sell these tokens as voting power, essentially, but you have to outweigh them with reputational. That's like the best thing we can hope for right now, right?
Yeah, I mean that's what we're seeing in I mean, like, I've got two different thought processes. So we'll stick with Uniswap. Uniswap has had multiple opportunities to upgrade and iterate their governance,
Yeah,
and change it, and they haven't. So I think that's one of the challenges
absolutely.
there. It's one token, one vote makes sense as a starting point because you want to engage everyone, but
Yep.
it cannot be one token to one vote 4 years, 5 years later. And I feel that's the issue there, where we're seeing these opportunists. At the end of the day, it's a game and these are the rules of the game, and this is how you can win in this game. Hold more tokens, um, and as you were saying, crush proposals, push through your own proposals. I think we've seen it done with Compound a couple of times as well, where people have
Hmm.
come in and brought tokens. The Curve Finance, that's the DeFi that I was thinking of
Oh,
earlier.
curve.
Curve
Yeah.
Uh,
Finance, yeah. Curve were the ones who would always, I told you it would come back. Curve were the ones who, again, they had their tokenomics, and then they introduced the bribery, so locking for like 1, 2, 3, 4 years, and you can see that iteration and upgrade on the tokenomics, on your voting or bribing power, and it made sense in terms
hmm.
of an iteration. Whereas comparing it to Uniswap, there hasn't been that iteration or that innovation in what governance looks like. There has been a right, lock your tokens, and then based on your maybe even your trading activity, where part of it is historical and part of it is on like the past 3 months, you're then getting more of a say, or based on how much you're providing liquidity. Like base metrics, because for you to build reputation, we're not going to have 100 data points that we're able to capture all at once. So let's start off with 1, 2, 3 data points. You can start to build a profile or a persona, and then you can start to layer in what reputation actually means, or what sub DAOs you want. So what are the specific data points you're going for within a specific subgroup of people? We're not seeing that. And again, it comes back, there's all of these references, what we've been discussing, to this tokenomics being an onion. This is the governance layer within the onion, and then this is the depth of that layer within the onion, which is why it makes people cry. It's just too much.
Oh man, Uniswap's a funny example actually, and I think one of our in that one example, one of our portfolio companies, Bubble Maps, had shown that the big reason maybe why there's been such a pushback is that the majority of the token holders happens to be like an aggregate of 100 plus wallets belonging to A16Z, and it kind of points to the elephant in the room, something that I've wanted to ask you about, that we've been seeing within this industry. And maybe Uniswap is like a relic of time past, because right now it's undeniable that Uniswap is one of the largest DeFi protocols in the world. There's so much money behind it. Since they turned on fees, it's incredibly profitable. It is a critical piece of infrastructure. And maybe if something like Uniswap launched today, there wouldn't be a focus on decentralization or governance as much. And I'm sure, like, dude, you and Carmelo and myself, whenever we look at businesses, we always think things like, how would I fit a token into this? And governance is a huge pillar of how a business might evolve to improve certain aspects of itself and then create a more engaged customer or user base, right? And so you can't deny that governance is a huge part of crypto. And so I'm wondering, is governance going to continue to play such a huge role, or will it continue to be phased out as we see this massive growing interest from the institutional finance arena and traditional finance arena stepping into crypto? Because it seems like all of the meta and trends that are emerging now around tokenized RWAs, stable coins, treasury accumulation vehicles, OTC deals, everything, a lot of this is copy paste TradFi. And the money's
Yep.
coming from an industry that has no incentive to give decision making ability to the masses, but having access to retail capital can potentially benefit their bottom line. So I'm wondering if, like, this core ethos of blockchain and crypto is going to be phased out, or if it's going to become irrelevant, or it's not going to get the capital it deserves to survive.
It, it comes down to financial literacy for just for everyone. Less so on the institution side. People do not understand the value of ownership, which is why they don't understand the value of governance as well. Or the governance they have been exposed to has been a sham. Like we can say that in the West, you can probably say it all over the world, to be honest. Like you have either two-party politics where you're fucked regardless of which way you vote, or you're somewhere in the Middle East or the Far East where it's just like a benign form of dictatorship, for want of a better explanation. Where it's just like I mean, like China's a great example. They've been under one leader and it's been a clear message. So they've been able to, for better or worse, they've been able to push as the country in the same direction for decades. Whereas the US, because of the continuous chop and change, is it Democrats coming in? Is it Republicans coming in? Who of our rich friends are we trying to appease, so to speak, on which side? That you have all of this chop and change, that there isn't that direct mission that everyone is a part of. So if you look in the East, for example, talk about democracy. Democracy doesn't really exist. It's not part of the fabric of society there. So when we talk
Hot
about
take.
governance, hot take, hot take. I like from what I've seen, I think it's true. The other thing is from what we've seen on chain as well, we have voting fatigue. No one wants to go into a DAO every couple of weeks, read one, two, three, four proposals in which they have no idea about or have no underlying experience or expertise to be able to give a meaningful response outside of, I think this is a great idea, or I think this is a bad idea because so and so said it's a good idea, versus I've gone through the business plan, I've gone through everything. This makes sense. This doesn't make sense, but this can alleviate that. something like that, then that's really good feedback to everyone else. But the reality is, if we do have that experience in the space, they're more on the TradFi side. So it's less about how, like, I want to be a community member, more about how can I get my fund to put money into something that's going to make us all rich, is more of the mindset. So I see governance taking much more of a backseat. Governance in general isn't exciting, which is why we tend to see the money in the industry flow to what is deemed exciting, which is making more money in a short space of time, which is also why we've attracted all of these bad actors, which is why airdrop mechanics are not working, which is why tokens are launching and they're going to shit. Like, we've got so many of the incentive mechanics or the incentive alignment wrong in the space. And governance within that, I feel it will see a lot more centralized governance versus decentralized governance, where a DAO, like we gave the example of what ApeCoin DAO was meant to evolve into, they will hire a centralized, they'll hire a team that they can hold to account to push forward, or based on the mandates, they'll hire different teams with different accountability to move forward. And it's at that point, back to the financial literacy aspect, that I know by holding a digital asset within this ecosystem, I do have a say. Versus I need to come in and vote on something every week, every 2 weeks, every month that I have no idea about. So I can see governance evolving. I've seen us as an industry going a lot more centralized, which makes sense because that's what everyone in a traditional sense understands. The concept of decentralization is great, but getting random people to agree on the internet on things that they have no experience on, even saying it's a very noble cause. But at the same time, if the token price isn't going up because what's being funded isn't bringing revenue back or isn't hitting its goal, depending on what that goal is, it becomes a big challenge. And people's attention in this industry, you have it for a minute, it's gone the next. And it's very, there isn't that much retention. I mean, there are on the bigger platforms, but in general,
Yeah.
once a token is live, people have extracted, it's just like, and we've seen so many game studios, like gaming was a big one because in 21 it was all about play to earn, GameFi. Every NFT project or every other NFT project that raised funds decided to build a game. Yuga Lab's no different,
Yeah.
hence the other side as well, because of the GameFi narrative, which makes sense. But unless you have a budget like Yuga or a budget like Mythical Games, where you can go out and actually pay for a really high quality game or high quality experience, most of them shut down because that's an industry in Web 2 that has been in regression. There's not been that much funding going into gaming. So there needs to be a turnaround, which is, we've gone on a number of different tangents, but yeah, governance
I love
has
it.
to change. Yeah, governance has to change, in my opinion. Or it is changing.
Yeah, another wrinkle there is like, we're decentralization maxis, but we're also realist. We know that not everything needs to be decentralized. Like, there's some things that just purely function better with a team in charge that knows what they're doing. It doesn't need to be 1,000 people voting on the direction of a business, which is why we've seen a lot of these issues. But I wanted to ask you too. This is not necessarily a token economics question, but usually we ask guests like, "How did you get into Web3?" and what was your career trajectory? But you've had the advantage of working with several DAOs and taking like senior positions or whatever you want to call it with the Ape DAO and now Open Campus. So we wanted to ask like, yeah, how do you get involved? Like, what would your advice be for somebody that wants to like try this alternative career path? Let's call it, because we've seen people raise funds from DAOs or in ecosystems like Arbitrum.
Yep.
We've seen people get jobs or work in DAOs, and they're not really hired by one person; they're hired by a community or a sub DAO or something. So, like, what would your advice be to those people that want to get more involved in DAOs? Because we absolutely need to get more regular normies once we abstract the tech away and we get more people involved in these decentralized systems, and it can be a viable alternative to going to apply for a job.
100%. I mean, it's find an ecosystem that matches with your ethos, I'd say, because at that point you're not incentivized to want to add value, you're motivated to want to add value. And I feel there's a big difference there between a motivation and an incentive. If you're motivated to do something, you're much more likely to stick the course, but also you're showcasing that I'm here to add value and not extract value. And that within an ecosystem, if you're showcasing that I'm someone who's trying to add value and I'm turning up every day, it then becomes a matter of time before someone in that ecosystem picks you up And like you've said, it's not just I'm going to have one job and it's going to be like a 5-year contract or something like that. It's going to be right. I'm helping out. It could be marketing. It could be psychology. It could be engineering. It could be anything. I think that the beauty of this space is that as long as you have a viable skill coming in from Web2, it's you can apply that skill differently, and it's a transferable skill
Yeah.
that you bring in. And it's find the place where you're comfortable. Like we talk about decentralization, and I know we discuss governance a lot, but maybe the other form of decentralization is actually you can work with people in where you're not held back by boundaries, or you're not held back by nation states. And I feel that's the stronger version of decentralization, is like we're all located in different places, but because of this industry, we're working together or we're connected to one another. Versus, all right, I can only be connected with people in London or in the UK, and you guys can only be connected with people in the US or wherever you guys are located. I feel you can find like-minded individuals anywhere on Earth, which is why we talk about like the evolution of the internet, Web3 or blockchain or whatever terminology we're giving it, is that natural evolution to the decentralization point. But no, find something you're passionate about, find something that resonates, start being active in that community, and as long as you're being true to yourself, the opportunity will come. And also, the biggest piece of advice is DM people. Just ask.
Yeah.
Like,
Yeah, just simply ask.
just simply ask. What's the worst that's got? I mean, if you don't ask, it's a no. It's a
Yeah.
guaranteed no. If you
This
ask,
is
it might be a yes. And you'd be surprised at how nice, and I use the word nice because a lot of times there's mindsets made about people who are like higher up in the space, or this person founded that company. Everyone is a human being. Some people are dickheads, don't get me wrong, and you'll figure out who those guys are. Maybe not the right terminology if you want this to be user friendly or child friendly. There are some really nasty people about, but that's in any
Yeah,
industry. But there are also a lot of really good people who want to add value. So
100%. Yeah.
ask, follow up. Like I know my DMs are always packed. So if I'm not responding to you, it's not because I don't like you or anything like that. It's purely because I've missed your message. And sometimes it's just that consistency of messaging. So that messages surface towards the top. But you have to ask, you have to apply yourself. And this is an industry where if you really step up and you're heard, you will be recognized.
man.
Amazing. I
That's
love that advice.
Yeah, that's very inspirational advice. I've been trying to figure out how to become president of Pizza DAO for a while now, and now I've got a good strategy. I'm just gonna
DM everybody.
endlessly DM them until they make it
GM and
happen.
DM.
GM and DM, yeah.
Oh man.
Oh,
Actually, I promised Sasha that I would let him ask the last question because we're going to get wrapped up soon. But I had one more spicy question. Kind
hit
of,
me.
you flowed nicely into it with talking about these quote unquote dickheads. Uh, we've seen a lot of market makers and fraudsters and scammers, touting their token economic expertise and misleading and almost preying on some of these founders that have no idea. They've never studied token economics. And Sasha and I, in particular, like we've been working with some Web2 companies wanting, they have successful companies already and they want to bridge it into Web3. They want to introduce a digital asset, maybe not fundraise against it, but they want to, launch an asset, maybe an NFT, maybe a fungible token. But what would your advice, aside from going to Animoca or going to Arcanum Ventures and working with us, what would be your advice to like avoid this minefield of, unprofessional people and doing it the right way, like finding the right people to work with on the token economic front?
If it sounds too good to be true, it probably is. So if someone's promising you the world, that's a big red flag straight away. Um, it, it's a tough one because if you say ask for historic success,
Yeah,
even if you're a good outfit, there may not be multiple historic successes purely because we're advisors, and we touched on this.
yeah.
You can advise until you go blue in the face. But if the founders on the other end don't listen to that advice, they launch, the token launch may not go well. It might be like, oh, Animoca or Arcanum or some of the other
Mm,
better outfits are just like, okay, we've tried. We know that we know what we're talking about, but you as a stakeholder hasn't. I'd also ask them who else they've worked with. So if you're speaking to an outfit, ask
mm,
them who else they've worked with and go to other founders and definitely speak with them and get their opinion, especially founders who have gone through the process, who have finished the
yeah.
process versus going through the process, because they will let you know once the token is listed exactly what's going on. Um, And be careful of people who there are people who design tokenomics and there are people who design financial engineering. There is a big
Yeah.
difference between both. So financial engineering is more the case around once the token is live, how can we continuously pump the token or showcase that there's positive price action on this? And
Yep.
it's very unnatural, and it normally turns out to be pumps and dumps from that perspective. But just ask. I mean, there are crypto is a galaxy within its own right, and the sun cannot shine on every part of the galaxy at exactly the same time. So there's pockets that get sunlight and there are other pockets that don't. So normally you'll find yourself in one or two pockets of the industry. There are more. And it's a good way to find out is, again, go on Google and search, go on YouTube and search, turning up to events, even attending online seminars and things like that. Just try and broaden your horizons as much as possible so you have a better understanding. And with a better understanding, you can make informed decisions.
That's perfectly stated advice. I've got no more questions. Well said.
Yeah, I was gonna say absolutely. I think for that very reason, when we're speaking with someone that reaches out and asks for some support in tokenomics, we like to coach founders, of course, and sometimes you have to coach them in like mistakes that you witness right then and there. And if some founders like sounds good, let's do it. It's like no, you should ask me more questions. Let me put you in touch with like all of our previous clients. Speak to them about what this process looks like, because also it's good for us. Like I want you to understand that like we have a way of working and it's not loose and it's not like very flexible or like wishy-washy. Like we expect a lot from you as much as you expect from us. And so shout out to all of our lovely portfolio companies and clients. Well, some of them drive us crazy, but it's okay. Much love to go around.
Touche,
But I want to ask,
touche.
touche, right?
It's the
endless,
onion.
endless.
It's
But
the onion.
I
It's the onion.
I want to ask you one more question, and then we're gonna go to our fun bonus round. But the last question, I want to take it back to what's happening with you and Animoca. And we know we talked about GameFi, we talked about play to earn. We've all been through this together. We've seen like this ridiculous roller coaster when it comes to Web3 gaming. And we've seen, interestingly, Animoca go from primarily a gaming company or a gaming ecosystem company where you're supporting a lot of portfolio companies and other ventures in the world of gaming to something that's a little bit more infrastructure and DeFi, and now even like RWA and DAO and education focused. And so, as head of tokenomics at Animoca Brands, what's coming across your plate every day? What type of exciting trends or projects are you working on actively now in this current industry?
Getting a good question. So Animoca is a beast that is misunderstood. And to your point, it's because we've been through an evolution. We were a gaming company to even prior to Web3. Like we were a conglomeration of gaming studios. If you like, focus on like the casual, hyper casual games, localizing them for the Chinese market. I think even dominated the App Store early days on the iPhone as well with the games. But to where we are today, the best way to describe Animoca is as an ecosystem builder, because we have our VC arm, which is a separate entity and we're the biggest LP for. We also invest off of balance sheet, which actually makes the investment thesis slightly different to a VC whose investment thesis is, or whose aim is ROI at the end of the term of that venture of that fund. Sorry. So we have the investment side, but what we also have is a host of advisory. And I feel this has been the biggest transition of Animoca in the past maybe 2.5 years, where we were quite subsidiary heavy on the gaming first. And we saw that model was very challenging because you're putting all of these resources into founders of gaming studios who a lot of them were not Web3 native. And I think between the three of us, we've dealt with enough founders who are not Web3 native, who sometimes struggle to, not sometimes, in most instances, struggle to adapt to Web3 and end up making Web2 decisions in a Web3 world, which don't go hand in hand. So there were a number of challenges there. So really, it was funnily enough, the tokenomics being the first advisory service that was offered. And then it was, well, this is great because we're able to help our portfolio companies, but tokenomics alone isn't enough. So that's where there's the marketing advisory that exists. We have our own KOL network as well. We have our market making desk internally, as well. So it's more the case of how can we support projects from 0 to 1 across all verticals, and even for some of the more prominent projects, how can we help on the fundraising side of things within our network? So really, Animoca's repositioned itself as an ecosystem builder within the space. We're not really leading rounds. Maybe a few years back, Animoca's leading our round, and everyone will get excited because it's Animoca. That's also hurt us as the company, because people are like, oh wait, you've done a DD, we don't need to do the DD, we're just going to invest. So there's a full sense of security there. And again, our investment thesis as an ecosystem builder is different to the investment thesis of a VC firm from that perspective. So I think that's one of the big misconceptions that I want to address. And I think in terms of tokenomics, it's a lot more, again, like you mentioned the RWA. We're building out the Nuva platform internally. From my understanding, China is very bullish on stablecoins. So we have a partnership with Standard Chartered, and we're working on the Hong Kong stablecoin. So there's a lot more on the institutional side, but also from the ecosystem side. Even from a number of years back, we'd invested in your chain links, in your polygons back in 2020, 2021 as well, because we saw the potential of what true network effects actually mean. And while gaming is great, if you want true network effects, you have to have your finger in multiple different pies as well. So you're able to at least share the experience and the knowledge with the different stakeholders in those ecosystems. The core focus is open campus as of now, given what we've been discussing, given my education background and my position there. So it's really how can I help the open campus ecosystem as much as I can through my knowledge, through my expertise, but also through my network, both in Web 2 and Web 3. Two other projects that I'm assisting with, one football, being a massive football fan, and I've been working on that project for a number of years, and AniChess, again, being an internal project, being a big fan of chess, at least in my younger years, and sometimes Neom, having contributed heavily over the past couple of years. My knowledge is needed every now and again. Being a native Arabic speaker, it's not bad to be able to leverage my other
Yeah.
language every now and again. So that's my core focus is, again, anyone listening in, I'm friendly. I don't bite unless you piss me off. But no, please, again, my DMs are open. Please do reach out if anything I've said resonates with you. More so on the education side. Again, we are an education protocol. Always looking for great ideas. Always looking for great builders to come in and join the ecosystem and see how we can actually improve education, not just for ourselves, but for our kids as well and the future generations.
Lovely, man. Lovely. I mean, all those projects you mentioned, very, very exciting, right? I know AniChess is launching a token pretty soon,
Yeah,
and some impressive backing there. One Football, a company that's been around for like a decade, I think, right? A massive, massive
14
company.
years they've been around. Yeah.
Oof, yeah. So it's amazing what you get to um, get involved with on a day to day basis. So thank you for sharing. We're gonna wrap this up. We've been taking up too much of your time, but it's been such an engaging discussion, and I gotta say, like, we had a whole list of questions to go through, and we didn't go through any of them. We just flowed, and we had this fun conversation talking to you about tokenomics, about fundraising, open campus, DAOs especially. But you know what? That's a good thing because that means we've got to bring you back on, and we've got to have a round two on this stuff.
I'm excited. I mean, I'm still processing round one. It was so good. But round two is going to be even better. I'm sure of it. But no, honestly, I think it's a breath of fresh air for me as well, just to be having a conversation with people who actually understand the depth of tokenomics and have been in the battlefield, have cried the tears after shedding off all of these different layers. But it's good to see builders like you guys as well. And I think like we need more. Oh, we honestly, as token economists or as whatever naming convention we want, like I know we have a Telegram group together, and I feel that's something with others. I feel we need to double down as a collective so we can stand up for tokenomics in the same way like Coinbase have got like, their stand with crypto. We have like the Blockchain Gaming Alliance to bring all of the different gaming companies together. I honestly feel we need something similar because as of now, there are so many bad actors in the space and there are so many people who claim that they're tokenomics experts when they're pump and dump
Yeah.
specialists. That the good builders, and the great thing is we don't see each other as competitors, or at least we don't, others might, but it's more the case of how can we support one another and just allow founders coming into the space to know these are the good tokenomists that exist. in the space. These are maybe the preferred partners. Here are the 6, 7, 8, 10, 5, whatever that number is, so that we stand together so we can make more noise. Again, the whole is greater than the sum of its parts. So I feel maybe there's an onus on us to work with our friends who are also like in the same vertical that we're in, to try and make more noise around tokenomics. I feel that it's, if we're going to wait for someone else to do it, we're going to be waiting a long time. The onus is on us to educate newer founders coming in, to try and be that hub, similar to like, was it blockchain.com a number of years ago, was where a lot of people were going. They'd search Bitcoin, blockchain.com would pop up, or bitcoin.com would pop up, and there would be your first ports of call. I think we need something similar, just so we can educate founders, or founders are not falling for the scams and the bad actors that are out there. So maybe that's a call to action for us, but for also our friends. And we've got loads of friends who are token economists, who are good guys and girls, who are trying to do things as well. And I feel it's on us. It really is to raise awareness.
No, 100%. And shout out Tokenomics Thought Leadership Telegram group. But yeah, you're right. Like you are one of the very few token economists that we consider recommending a company go to if we can't work with them for one reason or another. And I mean, you are the head of tokenomics at Animoca for a reason, and that is a big barrier for some founders to try and get in and work with you. But yeah, like we have a lot of respect for you and the work that you've done. So again, it's been such a pleasure, and I like this call to action. We do need to make more content focused on tokenomics that can educate people. We do need to call out the bad actors. We do have a duty to help people understand and recognize root cause of failures when they point the finger at tokenomics, because it's the easiest thing to do when price go to zero. So we've got a very, very big hill to climb, but we're doing it together, and that's been the fun thing. We've been doing this for years and we haven't stopped. So I love it. We want to end this interview with the same way we started, with the same question we end every interview with. But before we do, I want to remind all of our viewers, if you're enjoying this content, make sure you tap or smack or smash that like button, and throw us a follow or a subscribe. And make sure you join one of our fun communities. If you want to learn more about Mo and Animoca and Open Campus, check out the links in the show notes. We're going to drop them down there, along with Mo's social media, if you want to endlessly DM him to try and get his attention. So, Mo, let us know how that goes. And yeah, Mello, do you want to take it away for the last question, man?
Yeah, so like Sasha said, we ask this at the end of every episode, and aside from the companies you're currently working with, like Animoca or Open Campus, what are you most excited about in the next 6 to 12 months? And it could be a vertical, it could be a niche, it could be a specific token or company. What you're most excited about, or what do you want to give some love to, basically?
I honestly feel that we're a lot closer to the next wave of users coming in. The reason I say users is that they're not coming in for the tech; they're coming in for the front end experience. That we spoke about earlier. I think we're going to see that, and I mentioned your OneFootballs, your NHSs. I think there's a lot more web or projects or businesses that are steeped in Web2, who already have a following, who are tokenizing and starting to build community in a slightly different way. And that's what's exciting me, is how we can start onboarding end users to begin with, who can then become protocol owners, if you like, over time. So that's what's exciting for me. I think we've seen a rise in the digital asset treasury plays as well. Obviously, MicroStrategy was the first to do it with Bitcoin. I feel for certain projects in specific verticals, that's an excellent way to be able to onboard partners in the traditional sense who can't hold tokens on balance sheet, but are able to hold equities or shares in a company that's listed somewhere. So at least there's the ROI impact that's there, but they're able to come in and become partners. That's something we're quite close to finalizing at Open Campus. I don't know if I can say that or not, but by the time this is aired, I think it'll be fine. Yeah, so we're doing our own digital asset treasury play. And the reason for it is one of the biggest challenges we've had with educational institutions is they don't want to hold tokens. Like it's a genuine challenge there that, okay, this is great. We want to be part of the ecosystem. We want to issue verifiable credentials, but we can't hold tokens for whatever reason. If it's jurisdiction, if it's the risk appetite, etc., etc. So enabling businesses to hold shares through one of these digital asset treasury plays is actually a nice way to bridge Web 2 with Web 3. So that's something I'm quite excited about, as long as it's done right. And it's not just another, we get to raise 10, 20, 30, whatever $1,000,000 to buy the token. Yay, euphoria. And then buy back and burn kicks back in, or something like that, like we've seen year on year. Like if these things are done properly, I can see a much larger audience from an institutional perspective through the DATs, but also from a standard user base through your OneFootballs, through your AnyChesses. And there are so many other projects out there, or businesses in Web 2 who are looking to tokenize and create different kinds of experiences in Web 3. That's what's really exciting for me, because people will be engaging with the technology without knowing it's blockchain until they make money. And then they'll realize it's blockchain. And then their user journey will be completely different.
Man.
Or they unlock
I
something of
love
value.
that.
It doesn't have to be money. It could be in OneFootball, I win tickets to the Champions League final. That's more valuable to me than putting in $100 into something that 10x's. Because I get to see
Absolutely.
my team in the final. I get to sit in a box. I get the player's signature on the shirt. That's value. It's not money, or it's not a monetary value. You can assign a monetary value to it, but it's a different kind of value. And I feel onboarding normies, that's the kind of value we have to give back, not token airdrop.
Yeah,
And I'll
100%,
keep it
man.
there, because I can go on forever. So I'll stop there.
Such a strong answer. This is what it's all about. We're talking about DAOs. We're talking about communities. We're talking about incentive alignment. The most interesting part of tokenomics lives in the area of this non-tangible value, and I think that might be a great place to end it. Mo, I want to thank you again for coming on, taking this time to speak with us. Love speaking with you, man. And we've got to have you on again very, very soon to talk more about the progress we're seeing at Open Campus, the evolution that we're seeing within the Treasury asset vehicle and the institutional financial interest in crypto, and how all of this is trickling down to the evolution of tokenomics. Thank you so much again for coming on. Again, to all of our viewers, if you want to learn more about Mo, check out the show notes. We got all the links down there. And yeah, thank you, man.
Sasha, Carmelo, always a pleasure. Looking forward to the next one. And hopefully see
Absolutely.
you in Token. If you guys are there,
Yes. Yeah, see you in
then
Token, man.
see you there, man. I can give you a proper man hug.
Yeah. Let's do an interview there just on meme coins. That would be a fun one. So
Fuck me. Cool. Let's
we'll
do
send
it.
out
Let's do it.
we'll send out an update right after this video. All right, guys. Again, thanks to all our viewers for watching. We've got plenty of other Boom Room content and eye tests and interviews and everything coming out. So again, check out our socials, like and subscribe. And until then, stay safe. Take care, y'all. Ciao.
Thank you, everyone.
Ciao.
Bye.
All right, man.